Ole Hansen is the head of commodity strategy at Saxo Bank. He joins us now live from Denmark. Ole, can I start off with gold? It's a subject that's got a lot of people obviously very exercised at the moment. We've had a decent run this year. What are your targets going forward? And given where we are on the sort of the gold-silver ratio, am I buying gold or am I buying silver?
Hi, good morning, Guy. Well, I think the gold is actually suffering a bit of fatigue at the moment and confusion, because we've seen a weaker dollar, we've seen a reasonably good performance in stock markets, and gold has not really reacted to that. On the other side, we've got the fiscal cliff. So, but all in all, gold, I think, is still pointing higher. We're running through a bit of a correction here. They could probably go a bit lower than the 1700 where we are right now. Looking for that to average around 1850 in 2013.
Gold has been underperforming silver of late. That's usually a bit of a lead indicator that gold will come back. Is that something I can use as well?
Well, I think the silver we tend to stay away from it. It's obviously a brilliant metal when it goes, because it tends to accelerate much more than gold. But the volatility there is sometimes pretty difficult to deal with. But if our projections are correct, then the ratio will continue to lower, and we could potentially see that move below 50, which has been offering some support recently.
Okay, but palladium. Talk to me about the other precious metals in the complex too.
Yeah, I think they could be one of the surprises next year. We obviously saw the Johnson Matthey report recently, which were pointing towards the deficit both in 12 and 13 and possibly beyond that. You were talking about palladium before with regards to Russia, and I think the key thing is obviously how much they got left in their reserves. At the same time, the other big producer is South Africa, and with the unrest we've seen there this year, you could argue there could be some geopolitical risk priced into palladium at this time. So a commodity that's got a good fundamental picture is obviously something that the market will be looking for. It's a very small market, so that's obviously the biggest, probably one of the biggest problems for palladium.
Yeah, palladium's interesting. Gold, as you've already mentioned, has a supply-side issue as well. In terms of the overall importance of what you're watching at the moment, is it the demand side or the supply side? Which should you be focusing on?
I think the demand side has obviously been weak over the last year, and that's obviously we're looking for these kind of green shoots. US has been looking better, but obviously the fiscal cliff is continuing to create that a very muddy picture there for the US going into next year. China's demand situation is not picking up, but obviously the indicators are pointing towards some kind of recovery. So I think that's really where we could be looking next year. If you see on the supply side, for instance, on copper, supply is starting to hit the market coming into 13 and moving up towards 15. But obviously we are dependent on Chinese demand really for that price to elevate, to stay higher from here.
And what's your best guess on that front?
Well, I think it's one of those where we got the smallest amount in warehouses, so I think it's the one that got the best opportunity to pop if we start to see demand picking up. So from these current 8,000 levels, probably something towards the region of 8,400 next year, but obviously it very much depends on China.
Can you give us your thoughts on what the ag complex is going to look like, the agricultural complex is going to look like next year? Obviously an extremely difficult year, 2012, in terms of what the weather has delivered. Hard to sort of predict what the weather's going to be like in 2013. But as you look at the planting season, as you look at what's going on, what are you predicting?
Well, I think the forward prices right now on soybeans and corn are obviously quite substantially lower than where current market prices are, which indicates the market is obviously looking towards the US to another record spring planting. Again, the weather, as you say, is going to be the key factor there. I think the prices are probably a bit on the low side if we look towards the November 13 on soybeans and December 13 on corn, given that this uncertainty we've seen this year. So I would probably see, I could see soybeans move back up towards the 16.5 area on the November 13 contract, which is again quite a bit higher than where we are today.
What about some of the other commodities as well? What are you looking at in terms of sort of cocoa and coffee and sugar? If you were to pick one out for next year, what would it be?
Oh gosh, the soft sector has really been one of the laggards this year. But If I should pick one, I'd probably look towards coffee. There has been some recent signs that we could start to see the supply side being a little bit outweighed by the demand side next year. So if anyone within the soft sector, I'll look at coffee. But again, if you want to invest in softs, I'll probably look at the sector as a whole, because individual volatility is pretty high.
Buy a basket. Ole, we'll leave it there. Thank you very much indeed. Ole Hansen, the head of commodity strategy at Saxo Bank.